Buckle up, folks, because the global financial system is getting a serious makeover, and it might just involve a whole lot more Mandarin. The winds of change are blowing, and they're carrying the scent of dumplings and dragon dances. China, the economic powerhouse that makes even the most caffeinated Wall Street banker look like a sleepy panda, is not just flexing its muscles, it's setting the stage for a financial revolution. This Asian giant is making serious moves to knock the US dollar off its throne as the world's reserve currency. Imagine a world where the greenback is no longer the king of the hill. Think about that for a second. The implications are vast and far-reaching, affecting everything from international trade to your next vacation budget. The dollar, the currency we all know and well some of us love, might be losing its grip. It's been the bedrock of global finance for decades, but now, its dominance is being questioned. What does that even mean? Are we on the brink of a financial upheaval? Is your wallet about to get a lot more complicated? Is this the beginning of the Yuan dynasty? The echoes of ancient Chinese dynasties seem to be resonating in the modern financial world. Well, before we start stocking up on Mandarin phrasebooks and converting our savings to digital yuan, let's take a step back. Let's break down exactly what's happening and why it matters to you, me, and that guy down the street who's still trying to figure out how Bitcoin works. This shift isn't just a headline, it's a seismic event in the world of finance. This isn't just about economic jargon and graphs that make your eyes glaze over. It's about understanding the forces that shape our world and our wallets. This is about power, influence, and who gets to call the shots in the global economy. The stakes are high, and the players are formidable. And right now, China is playing three-dimensional chess, while the US seems to be stuck on checkers. The strategies are complex, the moves are calculated, and the outcome could redefine global financial power for generations to come. Okay, so why should we care if China prefers to pay for its dumplings with yuan instead of dollars? It might seem like a small, localized change, but the implications are far-reaching and could ripple through the global economy in unexpected ways. Here's the thing. The US dollar being the world's reserve currency is like having a backstage pass to the global economy. It's not just a matter of convenience, it's a cornerstone of global financial stability. It means countries and businesses around the world primarily use and hold dollars for trade and investment. This widespread use of the dollar facilitates smoother international transactions and provides a buffer against economic shocks. This gives the US immense economic power and influence, kind of like having the only working credit card at an all-you-can-eat buffet. The ability to print the world's reserve currency allows the US to borrow at lower costs and run larger deficits without immediate repercussions. But when a major player like China starts looking for alternatives, it's like someone just brought out a whole new menu, and everyone's suddenly interested in trying the Peking duck. This shift could encourage other countries to diversify their reserves, reducing their reliance on the dollar. If the yuan starts challenging the dollar's dominance, the US could lose some of its economic mojo. The dollar's value could fluctuate more wildly, and the US might find it harder to exert its influence on the global stage. We're talking about potentially higher interest rates, a weaker dollar making everything from iPhones to vacations more expensive, and maybe even a hit to our global standing. The cost of borrowing could rise, affecting everything from mortgages to business loans. In short, this isn't just about some numbers on a screen. It's about the potential for a major economic shakeup that could impact us all. The global financial landscape could be reshaped, affecting investments, savings, and even job markets worldwide. So, while it might start with dumplings, the consequences could be much more significant. Now, it's not like the dollar's been strutting around with a crown of roses lately. It's been facing some serious challenges, kind of like a boxer who's taken one too many punches to the face. First up, we've got inflation. Remember those good old days when a gallon of gas didn't cost an arm and a leg? Yeah, those days seem about as distant as a dial-up internet connection. Inflation erodes the value of the dollar, making it less attractive to hold for countries and investors. Then there are the geopolitical tensions. From trade wars to international disputes, the US hasn't exactly been winning any popularity contests lately. And when you're the world's biggest economy, people tend to notice these things. These factors have made some countries a little wary of keeping all their eggs in the US dollar basket. They're starting to look for alternatives, and guess who's waiting in the wings with open arms and a big old pile of yuan? You guessed it, China. So how exactly is China trying to pull off this economic power play? It's a multifaceted strategy that involves several key components, each meticulously planned and executed to ensure maximum impact on the global stage. Well, they've been pretty strategic about it. like a chess grandmaster planning their moves several steps ahead. Every move is calculated, every decision is weighed for its potential to shift the balance of economic power in their favor. Here's a peek at their playbook. First, internationalize the yuan. This isn't just about making the yuan more visible, it's about embedding it into the fabric of global trade and finance. China knows that for the yuan to be a serious contender, it needs to be used and traded globally. This means encouraging other countries to hold yuan reserves and use it in their international transactions. They've been striking deals with other countries to use the yuan for trade and investment, slowly but surely increasing its presence on the world stage. Second, forge partnerships. These aren't just any partnerships, they're strategic alliances that serve multiple purposes. China's been busy building strong economic ties with countries around the world, particularly in Asia, Africa, and Latin America. These regions are crucial for China's long-term economic plans, providing both markets for Chinese goods and sources of raw materials. These partnerships often involve using the yuan for transactions, further chipping away at the dollar's dominance. Third, promote digital currency. This is where China is really looking to innovate and leapfrog traditional financial systems. China's been at the forefront of developing its own digital currency, the digital yuan. This isn't just a digital version of their existing currency, it's a whole new way of thinking about money and transactions. This could be a game changer, making it easier and faster to conduct transactions in yuan, potentially bypassing the need for the US dollar altogether. Imagine a world where digital transactions are seamless, instantaneous, and borderless. China's playing the long game here, folks. They're not just looking at the next few years, they're planning for the next few decades. This is a marathon, not a sprint. They're not expecting to dethrone the dollar overnight, but they're making sure they're in a prime position to take over when the time is right. By laying the groundwork now, they're setting themselves up for future success, ensuring that the yuan will be ready to step into the spotlight when the opportunity arises. Remember when, insert a very recent event like a major oil deal conducted in yuan, a significant announcement from BRICS regarding a new reserve currency or a large-scale de-dollarization effort by a group of countries? Yeah, that was kind of a big deal. That wasn't just some random news blip, it was a clear indication that the global financial landscape is shifting. The dollar's dominance is being challenged, and the world is taking notice. This event sent shockwaves through the financial world, with many experts pointing to it as a sign of things to come. It's a wake-up call that the dollar's reign might not last forever, and a new world order, with the yuan potentially at the helm, could be on the horizon. So, what does this all mean? Are we all going to be walking around with pockets full of yuan, desperately trying to remember how to say, how much is that in US dollars? Well, it's probably not going to be that dramatic, or that immediate. The US dollar isn't going to disappear overnight. It's still a major player in the global economy, and it's going to take a lot more than a few countries ditching the dollar to completely dethrone it. But there's no denying that the balance of power is shifting. China's rise as an economic superpower, combined with the dollar's own struggles, has created the perfect storm for a potential currency shakeup. The future of money might be a multipolar world, where multiple currencies, including the US dollar, the Chinese yuan, the euro, and maybe even some cryptocurrencies, all coexist and compete for dominance. The short answer is no, you don't need to sign up for Mandarin lessons just yet. But it wouldn't hurt to brush up on your global economics. The potential shift away from the US dollar as the world's reserve currency is a complex issue with far-reaching implications. It's not a simple case of one currency replacing another, it's about a fundamental shift in the global balance of power. Understanding these changes and their potential impact is crucial, whether you're an investor, a business owner, or just someone who wants to be informed about the forces shaping our world. So, stay tuned, folks. The global financial system is in for a wild ride, and it's going to be interesting to see how it all plays out. What do you think about the rise of the yuan and the potential decline of the US dollar? Is this the beginning of a new economic world order, or is the dollar's dominance here to stay? Share your thoughts in the comments below. And don't forget to subscribe for more in-depth analysis and witty commentary on the biggest stories shaping our world.